Yo, 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 yo! What's going on here? Kunal is here, ready to shred with my boys. Guys, I want to talk to you about earnings today, right? Earnings is one of the key drivers in the stock market. It is one of the most important times to trade. So I want to go over an earnings strategy that I think is going to be really, really important for you guys to progress and just elongate your game. So when you think about trading, guys, we have technical analysis, right? And when you do technical analysis, you're essentially drawing out supply and demand levels and then trading around it. And these are technical things, right? And so, you're drawing your squiggly lines, you got your supports and resistances and so on and so forth. And so when you have stocks that move, they will move pretty much according to their ATR every single day. So for example, like a stock like AMD has an ATR of $4. So in absence of news, it's going to move, give or take, around $4 every day. Like a stock like NVIDIA is, on average, going to move around pretty much close to its ATR. And a lot of times even a little bit under the ATR. So when does a stock actually make those big, powerful moves, right? And I'm not talking about like the small cap pump and dump, so just like real companies. It is during earnings season when they actually have news out. So what we want to do during earnings season is stay away from all this boring crap. Look, I love trading NVIDIA and Tesla and all this stuff too. Do it every day. Shit, made quite a few trades on them today. But where my gains come is from trading earnings on any given day during earnings season. So let's go into a very, very simple strategy that you guys can use right now to trade earnings. So first of all, how do you even get the earnings? How do you know what stocks have earnings out? So in TC2000, you can run a gap scan, right? So there's just a pre-market scan, and it'll show all the stocks that are gapping up or down. Now, obviously, you'll have some parameters on there, so you won't always get every single stock that's got earnings because, some stocks don't gap up that much. For example, AMD, the day that it, had its earnings out, made this big, powerful push right here. There was really no gap on it. It just kind of opened up flat, and then it was off to the races. So you need to know these things. So what I do is, in our Discord room, we have a little bot that comes in, tells you the news for the day. Hey, this is your economic calendar. These are the earnings that are going to come before the market and after the market. I literally stick them on a watch list in TC2000 and sift through them in the pre-market to see what's got liquidity, what's moving around, what's not like some illiquid, just junk play. And then I stick them on a list, right? And so in the morning, we put a handful of stocks that were on the list. And, I usually keep them on for a couple days. And so, I had Rivian on, I had Aerie on, so on and so forth. So let's talk about Aerie. So this is a very simple setup. You guys can do this literally right now. So this is called an opening range breakout. So, it's one of the first trades that I took today. I took all sorts of trades today. Started off with D-Dog, then I started Microsoft, then I come in hot on Aerie. But I took this short on Aerie. I shorted at 1481, covered some 1455, covered some at 1417, and then I believe that they covered the rest out at 1385. So just a nice dollar shred, and it happens quick, right? This isn't the first 15, 20, 30 minutes of the market day. But this is an opening range breakout setup that you guys can utilize literally right now. So Aerie gaps down. One of the reasons that I want to put on my watch list is if you look and see what solar stocks have been doing the last few months. Nasty, 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 right? So we got this nasty, nasty action in solar names over here. And so we already see this, right? So SCETIG, ENPH, these are kind of the biggest solar names. They've all been in huge kind of stage 4 downtrends. And so when I see the gap on Aerie, I know most likely this is going to be one that has a little bit of follow through. So opening range breakout consists of you break down at the open, You get 3 sideways candles, minimum 3 sideways candles. Then you shred it on the break of the opening range. So that's why I added about 1485. You're going to hit this as this breaks down. You're going to tentatively put a stop over the VWAP, but it's going to be a lot tighter than that. Because if it doesn't work right away, you got to get out. So what I use is an oh shit stop loss. And then, so it's like I'm putting it at the VWAP, but it's going to really be about 10, 15 cents so I can get some size into it. And then it's just a matter of, right, shredding out it. So, you know, I ended up coming out of this thing. Last year is at 13.85. So just piecing out, you know, every 20, 30 cents. Of course, you can, you know, just hold the whole way, but you can see like these things that will start to bounce right back, and then you'll get like a secondary, thirdary setup later on. You know, we took then a nice, easy, happy-go-lucky trade in Rivian, same type of deal, right? So Rivian gaps up a little bit, and then it doesn't start to follow through. So this is called opening range break down, but it's just in a little bit of a reverse, right? So you start to build out a range at the open. You can see kind of 1 candle, 2 candle, 3 candle, 4 candle, 5 candle. When it takes out this zone of love here, right, I'm all balls deep in this thing. You know, so I short Rivian at 1745, and then, you know, it's a similar deal. I get out at 1680. Doesn't look like much, but with a lot of these earnings plays, so what's going to happen is, you know, I use on something that's like more liquid, like a Rivian, because the margin sucks on E-Trade. I go with the puts. So, you know, when I'm shorting this thing at 1750, you know, I'm adding in the puts, and I got them at like 58 cents was my average. And so, like, as this thing is coming down into this, like, you get this huge ramp. Like, you know, they end up doubling, which is still pretty nice. Like, the stock will only move down like 60, 70 cents, which is still pretty good on a, you know, $17 stock. But you can roll in with the puts, and you might catch yourself a double just for getting like this baby shred. So this is what gives, you know, earnings so much action. Like the ATR on Rivian is just $1, but you can see from top to bottom, you know, it was 250, and then it moved around about 250 more in the pre-market. So you got all sorts of action on these things. A majority of the time, I'll do the puts on them, and, you know, if I don't see that, then I'll just do the shares. You know, these are a little bit cheaper than I normally like to trade. I like to trade a little bit larger names, but we do what we have to do. Guys, this opening range breakout and breakdown strategy works so well in the earnings season. You guys really want to take part in it because it is my bread and butter. Like, this is what, you know, I've grown up trading. I've been doing these setups for 15 years, and this is what I teach in my trading boot camp. Guys, hopefully that helps. Let me know if you have any questions. For a lot of you guys, I'll see you in Las Vegas. For Traders for a Cause, go Detroit Lions this year. We're going to that Super Bowl, baby. I'll see you guys. Peace.